we have been able to record a net profit of 1,301 crores for the second quarter, vis-a-vis 1,166 crores during the last year's second quarter. This translates to a growth of 11.6%. On the operating profit front also, we have been able to record a robust growth of 11.5%. From a level of 2,127 crores, we have been able to increase the operating profit to 2,370 crores. Even on sequential terms, both the net profit and the operating profits have shown a healthy growth of around 5%. This robust performance in terms of improvement in profits has been possible on account of a sustained increase as far as the net interest income and also the non-operating income. The net interest income has increased from a level of 2,567 crores last year to a level of 2,862 crores in the second quarter of the current year, translating into a growth of 11.5%. As you would recall, even in the first quarter of the current year, the net interest income was 2,798 crores, and sequentially also the bank has been able to show a healthy growth. The fee-based income has increased by about 13% from a level of 734 crores last year, second quarter, to 828 crores in the second quarter of the current year. Almost all segments of the fee-based income have shown a robust growth, whether it is the fee income, the exchange transaction profit, sale of investment profit, or the recovery in the bad debts written off. Almost all segments the bank has been able to make a sustained growth in that. One redeeming feature of the performance of the bank in the second quarter has been our ability to maintain the NIM. The NIM, as you would recall, was 3.22% in the trailing quarter, that is quarter one of the current fiscal. We have been able to not only maintain it, we have been able to improve it by 1 basis point to 3.23%. This is for domestic operations. Considering the fact that we are still passing through a phase of higher interest rate scenario, this particular performance in terms of protecting the NIM could be viewed very positively. This has been possible on account of our emphasis on ensuring that the overall cost of deposits are maintained or slightly reduced, and consequently therefore the cost of deposit has been maintained at about 7.36%, whereas the yield in advances has improved to about 11.75%. Therefore, all in all, the ALCO management, which we have been strongly emphasizing in terms of moderating the cost of deposits and maintaining the yields even in the current context, has shown considerable improvement and therefore has been able to contribute substantially to that. Talking about recoveries, the recoveries have been quite very robust. NPA recovery of 174 crores vis-a-vis 145 crores in the corresponding quarter last year, 125 crores in the trailing quarter, that is quarter number 1 of the current fiscal. PWO recovery was 65 crores. Overall, therefore, total recovery has been to the extent of 239 crores, trailing quarter 208 crores. Therefore, I would say the focus on that also has been able to contribute to the overall performance of the bank. We have been able to contain the gross NPA at a level of 1.98%, still less than the 2% mark, and a net NPA as low as 0.82%, perhaps one amongst the best in the industry. And we have been also able to maintain a provision coverage ratio which is as strong as 76%. So strong recoveries, strong performance in terms of overall operating surplus, which has enabled us to make provisions to a large extent, and therefore ensuring that the provision coverage ratio is maintained healthy. Therefore, with these parameters, the bank has been able to show an improvement in terms of all parameters of profitability and efficiency. The return on asset has been healthy at 1.12% for the second quarter. As you would recall, the first quarter return on asset was 1.01%. return on equity at 18.02, and a cost to income ratio, global ratios at 35.73%, which again is a very healthy phenomena. The capital adequacy ratios continue to be strong, 12.91%, of which tier 1 is as high as 9.57%. And I would also like to mention that this is without factoring the profits which the bank has earned in the first 2 quarters, and therefore overall CRAR has been quite satisfactory. In terms of the international business, the growth has been strong, almost about 35%. The international business contributes almost about 30% of the total business for the bank as of now, and the contribution to gross and net profits have been to the extent of around 26 to 27%. Therefore, overall in the area of international business also, the bank has been able to maintain the strong performance in the current quarter also.